Right now, most people in crypto are still thinking too short term. They are focused on quick pumps, daily price movements, and short-lived hype. But the real money in crypto has never been made by chasing candles. It has always been made by those who positioned themselves early, stayed patient, and understood where the technology and capital were moving years ahead of time. If your goal is long-term wealth by 2026, this video is not about gambling. It is about strategy, conviction, and investing where the future is quietly being built. As we move closer to 2026, the crypto market is entering a very different phase compared to previous cycles. Institutional investors are no longer experimenting. They are committing capital. Governments are no longer ignoring crypto. They are regulating it. And major corporations are no longer skeptical. They are integrating blockchain technology into real-world systems. This shift means the next wave of wealth will not come from random meme coins, but from projects with real utility, strong fundamentals, and long-term relevance. Before talking about specific crypto investments, it is important to understand the mindset required for long-term success. Long-term crypto investing is not about timing the exact bottom or selling the exact top. It is about identifying assets that can survive multiple market cycles and continue growing as adoption increases. Volatility is not your enemy. Impatience is. The investors who will benefit most by 2026 are those who can hold through fear, ignore noise, and stay focused on fundamentals. Bitcoin remains the foundation of any serious long-term crypto strategy. Despite thousands of new projects launching every year, Bitcoin continues to dominate the market as the most secure, decentralized, and trusted digital asset. By 2026, Bitcoin's role as digital gold is expected to be even stronger. Institutional adoption through ETFs, corporate treasuries, and sovereign funds is gradually reducing Bitcoin's circulating supply. With each halving event, new supply becomes more scarce, creating long-term upward pressure on price. Bitcoin may not deliver explosive short-term returns like smaller altcoins, but it remains the backbone of long-term wealth preservation in crypto. Ethereum is another critical pillar for 2026 strategy. Ethereum is not just a cryptocurrency. It is the settlement layer for decentralized finance, NFTs, gaming, tokenized assets, and smart contracts. As Ethereum continues scaling through Layer 2 solutions and protocol upgrades, its ecosystem is becoming faster, cheaper, and more accessible. By 2026, Ethereum is expected to play a central role in global financial infrastructure, powering applications that millions of users interact with daily, often without even realizing they are using blockchain technology. Beyond Bitcoin and Ethereum, long-term wealth will be driven by infrastructure projects that enable the crypto economy to function efficiently. One of the most important areas is Layer 2 scaling solutions. These networks reduce congestion and transaction costs while inheriting the security of major blockchains. As adoption increases, Layer 2 platforms are likely to capture massive value by processing a significant portion of blockchain activity. Investors who understand this shift early are positioning themselves in assets that benefit from long-term network usage rather than short-term speculation. Another key sector for 2026 is interoperability. The future of crypto will not be dominated by a single blockchain. Instead, multiple networks will coexist, each optimized for different use cases. Interoperability protocols allow these blockchains to communicate and transfer value seamlessly. As more chains emerge, the demand for secure and efficient cross-chain solutions will increase. Long-term investors should pay close attention to projects building the infrastructure that connects the entire crypto ecosystem. Decentralized finance continues to be one of the most powerful long-term narratives in crypto. DeFi is transforming traditional financial services by removing intermediaries and giving users direct control over their assets. Lending, borrowing, trading, and yield generation are becoming more efficient and transparent through smart contracts. By 2026, DeFi is expected to integrate more closely with traditional finance, attracting institutional capital and regulatory clarity. Projects with strong security, sustainable token economics, and real usage are well positioned for long-term growth. Another major trend shaping the 2026 strategy is real-world asset tokenization. This involves bringing assets like real estate, stocks, bonds, and commodities onto the blockchain. Tokenization increases liquidity, reduces settlement time, and opens access to global investors. Financial institutions are already experimenting with tokenized assets, and by 2026, this sector could become one of the largest drivers of blockchain adoption. Investors who recognize the importance of this trend early may benefit significantly as traditional finance merges with decentralized infrastructure. Artificial intelligence and blockchain integration is another long-term theme that cannot be ignored. AI systems require vast amounts of data, computation, and verification. Blockchain provides transparency, immutability, and decentralized coordination. Projects that combine AI with blockchain technology are creating decentralized data marketplaces, autonomous agents, and trustless AI systems. While this sector is still early, the long-term potential is massive, especially as AI adoption accelerates globally. Security and privacy-focused projects are also gaining importance as the crypto market matures. As more value moves on-chain, the demand for secure transactions, identity protection, and data privacy increases. Privacy-focused blockchains and zero-knowledge technology are becoming essential components of the future digital economy. Long-term investors should consider projects that prioritize security and compliance while preserving user autonomy. Gaming and metaverse-related crypto investments are often misunderstood, but their long-term potential should not be underestimated. Blockchain gaming is evolving beyond simple play-to-earn models into immersive digital economies where users own assets, identities, and experiences. By 2026, gaming ecosystems powered by blockchain could rival traditional gaming industries in size and engagement. Long-term value will flow to platforms that attract real users, developers, and sustainable in-game economies. Another crucial aspect of long-term wealth building is understanding token supply dynamics. Projects with excessive inflation, poor token distribution, or weak incentives often struggle over time. Successful long-term investments typically have controlled supply mechanisms, strong demand drivers, and clear utility for their tokens. Before investing, it is essential to understand how tokens are issued, distributed, and used within the ecosystem. Risk management is just as important as asset selection. No matter how strong a project looks, diversification remains a key principle. A well-structured long-term portfolio balances large-cap assets like Bitcoin and Ethereum with carefully selected mid-cap and emerging projects. This approach reduces downside risk while maintaining exposure to high-growth opportunities. Position sizing and patience are what separate disciplined investors from emotional traders. Timing also plays a role, but not in the way most people think. Long-term investors focus on accumulation during periods of fear and uncertainty. Historically, the best opportunities to build positions have appeared when sentiment is negative and prices are depressed. By the time mainstream media turns bullish, much of the upside has already occurred. The goal is not to predict short-term movements, but to consistently build positions over time. By 2026, regulatory clarity is expected to improve significantly across major markets. While regulation often creates short-term fear, it provides long-term stability and legitimacy. Clear rules attract institutional investors, reduce scams, and encourage innovation. Projects that proactively comply with regulations and work with institutions are likely to outperform those that rely purely on speculation. One of the biggest mistakes long-term investors make is ignoring on-chain data and fundamentals. Metrics such as active addresses, transaction volume, developer activity, and network usage provide valuable insights into real adoption. Price alone does not tell the full story. Long-term wealth is built by investing in growing networks, not just rising charts. Another important factor is conviction. Long-term investing requires the ability to hold through volatility without constantly questioning every market move. Strong conviction comes from research, understanding, and alignment with long-term trends. Investors who panic sell during corrections often end up buying back higher or missing the largest gains altogether. As 2026 approaches, the crypto market will likely become more competitive, more regulated, and more integrated into the global economy. This evolution favors quality over hype. The projects that survive and thrive will be those that solve real problems, attract real users, and generate sustainable value. Long-term wealth will flow to patient investors who recognize this shift early. To summarize, building long-term wealth in crypto by 2026 is not about chasing the next viral token. It is about understanding macro trends, investing in foundational technologies, managing risk, and maintaining discipline. Bitcoin provides stability, Ethereum powers innovation, and emerging sectors like Layer 2 scaling, DeFi, real-world assets, AI integration, and interoperability offer long-term growth opportunities. If you are serious about long-term crypto wealth, your strategy should be simple but powerful. Accumulate high-quality assets, ignore short-term noise, and focus on where adoption and capital are moving over the next several years. The biggest opportunities are often invisible to most people until it is too late. If this video helped you think more clearly about your 2026 crypto strategy, make sure to subscribe to the channel for more deep, data-driven analysis. We focus on long-term thinking, smart investing, and staying ahead of the market, not chasing hype. The next cycle is being built right now, and those who prepare early are the ones who benefit the most.